Hello, today I'm going to talk about something very, very important to all gold and silver investors, and that is the psychology by which banksters try to scare you out of gold and silver investments. Now, I know that those that have been investing in gold and silver for 6 years, 7 years, 10 years, 15 years are all aware of the psychological ploys that banksters use to scare people out of gold and silver investing. But this video is mostly for the newbie investors to gold and silver because they don't understand the different tactical moves banksters use that have to do with basically psychology and psychological effects that are able to scare investors out of their assets they own in gold and silver, whether it be mining stocks or whether it's actually the physical gold and physical silver. So when investing in gold and silver, one has to separate the facts and the fundamentals from emotion, because banksters know how to use emotion to scare people out of solid investments such as gold and silver. So they try to always introduce fear into the equation to get people to panic sell out of gold and silver, when in fact it will be the best investment into the foreseeable future, as it has been for the last 10 years of this gold and silver bull. So they also have implanted into people the equation, or basically equating volatility with risk. So that is why the banksters are so keen on always introducing volatility into the gold and silver futures markets and also into gold and silver mining stocks. However, if you look at the long-term picture, when you let emotion rule you, when you let fear rule your decisions, it always leads to bad investment decisions. And basically, you make those decisions when it's based upon emotion stuff instead of facts, in a very tunnel vision manner, when you're just looking at the short term instead of looking at the very, very long term. So what you need to do is basically step away, using the cliche, step away from the tree so you can see the forest, you can see the long-term picture. Because gold and silver assets, because of the fact that banksters deliberately engineer crashes, because really there's no sense whatsoever when, say, there can be 3% swings in intraday silver, but you always notice silver in Asia a lot of times during those swings can be 1.5% higher. And by the time it opens in New York, that's when the banksters engineer their crashes, and they basically pull all their bids in the silver futures market. So it goes from 1.5% higher back to even, and then even 1.5% lower. So when you have these swings that basically are based upon nothing fundamental, it's very, very confusing to newbie investors. But you also have to realize that they manufacture this racket in the paper market. So basically they're selling off paper ounces of gold and silver that don't even exist, because in the paper silver and paper gold market, they literally sell hundreds of times, they literally trade hundreds of times more gold and silver than exist in the real world, and real physical gold and silver ounces that exist in the real world. So if you just think about that for 1 second from a logical standpoint, that is a ludicrous concept that bankers have invented this totally bogus fake market whereby they can control and suppress the price of gold and silver by trading ounces of gold and silver that don't even exist. And in fact, even in silver, in New York COMEX this year, they've traded more than they've traded more than 250 million ounces of silver in 1 minute to affect the price suppression scheme, which is absolutely insane, considering the amount of physical silver that's actually available for private investment every year, for private investment purchase every year, is less than 250 million ounces. So they're trading more than the entire amount of physical silver mined out of the earth per year that is available for personal and private investment in 1 minute. So again, if you think about that concept, you'll realize from a fundamental perspective that the price of paper futures, silver, and paper gold futures, paper gold, silver futures, has no reflection at all upon the fundamentals about the real supply and demand of physical gold and physical silver. So one thing I've heard a lot of times is is even when people realize this, they say, so why should I invest in physical gold or physical silver or even mining stocks if it's the case that bankers can manipulate the prices so much and basically engineer very steep and rapid falls and declines in the price at times? Because again, the reason is you got to step away from the trees to see the forest, because they can only affect these rapid drops in the short term. But as far as the long term is concerned, if you look for the past 10 years, every year gold and silver has been rising, and that will continue to be the case. So they only introduce this rapid volatility in such a way to maximize the amount of fear in new gold and silver investors that don't understand what they're doing. So for instance, even in the mining stocks, when you may see the mining stocks like be at this level, and then they bring it down to this level, and then they allow it to rise back up to this level and bring it down to this level again, what in effect this does, it's much more frustrating to investors that don't understand what's going on than if the bankers just took down the mining stocks from this level to this level once and then allowed them to rise back to the original level and then go higher. Instead, the bankers often will play games by taking the mining stocks from this level back down to this level, but let it rise back up and then take them back down again before finally letting them rise back up. And the reason they do this again is to confuse people. But if you look at the fundamentals of the mining stocks and the very solid gold and silver mining stocks, there's no reason for this volatility other than the fact that bankers are playing games with you. So if you understand, again, the long-term fundamentals, you understand that every time the bankers take it down, it's just a wonderful buying opportunity to get in. Because if you look at the long-term trend, again, you'll see that the long-term trend of the mining stocks has been to rise over time. So while the commercial investment industry always wants to tell you that volatility is bad, certainly in this case, the volatility only hurts people with a short-term view when it comes to gold and silver investing, because by the end of the year, gold and silver assets have always been rising for the past decade. So for instance, if you look at my investment newsletter, which I launched in June 15th of 2007, we could see that since that time up until September 30th of this year, my cumulative return to my clients has been a gain of 162.40%. But over that same period, we've seen the Australian stock market index produce a loss of 36.2%. We've seen the US stock market, the S&P 500, produce a loss of 25.70% over that time. And even if you look at some of the best, what are considered some of the best emerging markets, say in Asia, like in Thailand. The Thai stock market has only produced a 16.98% gain over that same time period from June 15th, 2007, when I launched my newsletter, which is concentrated in gold and silver assets, up until September 30th of this year, 2011. So even when we look at some of the best performing emerging markets, my newsletter that concentrates on gold and silver has returned 10 times more of a gain than some of the best emerging markets in the world. So when we look at this whole the whole mantra that the commercial investment industry wants to sell to you of volatility in gold and silver, making gold and silver a risky asset, we see that what they try to do is to concentrate your vision into a tunnel. So you only look at what's going on within a compact period of time within, say, 1 or 2 or 3 months. Whereas every time the bankers take down gold and silver assets, in the short time frame, if you wait 3 months, you'll see that it just rises right back up to the level from which it started, from which they took the price down, and then from that point will continue to rise higher. Whereas the commercial investment advisors always advise that that basically you maintain your assets in the general stock market. But if you look over even the past 10 years, you still have a net loss in most of the world's global developing markets after 10 years. So as a gold and silver investor, I'm asking you just to have patience through this volatility for like 3, 4, 5, 6 months, and you'll see that you will get your losses back. If you got in at the wrong point, you will get your losses back. But if you've been in for years, you're still sitting on a net gain, even after these scary banker engineered drops in gold and silver assets. So you must realize that the methods that bankers use to induce fear and to prevent people from investing in gold and silver are usually ad hominem attacks as well, meaning that their attacks appeal to emotion rather than any type of valid logical argument. So in the beginning, that the bankers and the bankers shills and the media used to attack me for basically saying that they manipulate the gold and silver markets by, calling us conspiracy loonies or calling us crazy. So this was like 5 or 6 years ago when I started extensively blogging about banker manipulation tactics in gold and silver, that this is how they tried to discredit me. And it's the easiest way to discredit someone is just to call them crazy. But in the absence of any type of fundamental logic, it's just really an attack that is based upon emotion. And only those that are sheep, that have no brain of their own and have no capacity to think for themselves, buy into this attack. So 5 years later down the road, when we look at today, and it's very well accepted, even among some mainstream commercial investment leaders, that gold and silver is manipulated by the JP Morgans and the HSBCs and the Deutsche Banks and the Citigroups and the Goldman Sachs of the world. We look at it today as that, the situation is no different than any of the arguments we were making 5 or 6 years ago, but it just takes a while for truth to be accepted into the mainstream. And I won't even say it's accepted now into the mainstream, but it's more widely acknowledged that, yes, this is what's going on. The bankers do manipulate gold and silver in the paper markets. So never accept any type of argument in the absence of any type of logical or fundamental foundation, which is a lot of times how bankers convince people to do the wrong thing, is they appeal to the emotion of fear to try to induce panic to get people to do the wrong thing for themselves and for their family and for their financial future. Now, I also want to talk about the importance of gold and silver ownership to freedom. Because Alan Greenspan once said himself that gold and economic freedom are inseparable, and there's a reason for this. Because I'm not going to go into this video, but the whole global monetary scheme, the fractional reserve banking system, is basically, it's a huge immoral scheme that just transfers wealth from every citizen in every country in the world to the elite 1% of bankers in that nation. So the way to combat that is basically to own physical gold and physical silver and to use your mind while doing it, not to so you aren't swayed by the banker shills to panic sell out of the greatest weapon. This is the weapon we have to use to win this war against the banksters. The war we have is our brain and gold and silver. So giving up our God-given ability to think for ourselves, to critically formulate our own conclusions and our own opinions based upon facts, not based upon appeals to emotion. And also to own physical gold and physical silver, which counteracts the risk of all fiat currencies. And by the way, every single fiat currency in history has collapsed eventually. There's no fiat currency that has ever survived thousands of years, even hundreds of years. So we look at the US dollar as, it has been created by the US Fed Reserve in 1913, and we're embarking only on 100 years. But you look at gold and you look at silver, and they've been used as monetary vehicles for thousands and thousands of years. So why would you put your faith in a currency that has collapsed in every single empire and civilization? Fiat currency, fiat paper currency that's backed by nothing, versus putting your faith in gold and silver. So that is why ownership of gold and silver is so critical to our struggle for freedom and to win our freedom from the criminal banking cartel today. And finally, the last point I want to make is just that when you look at this banker manipulation, if you learn the patterns over the years, you can see a definitive pattern. So there was Andrew Maguire, who was a silver trader in London, who basically told the CFTC certain days that the bankers were going to crash silver, and they happened exactly as he predicting. There's no way you can predict these things with certainty unless these markets are being manipulated. So the one thing I would say is that when you look in gold and silver, yes, it's right now as of October 20th. It is decreasing again, and it will likely decrease because I've seen this pattern into the end of this month, into October 27th and 28th, and then start rising again in November. So you could see these patterns of manipulation and these patterns of weakness. And of course, you always see that gold and silver typically are higher in Asia. But once the London and New York markets open, that's when the Western bankers do their dirty work and they bring the price down. So my last message to you is don't be fooled by this volatility. Look at the long-term trends and the long-term patterns of gold and silver, and you will see that they will still rise. And I do expect a very strong rise of gold and silver into the end of this year after this period of banker-engineered weakness in gold and silver runs its course, which will probably end, I would say, by the end of this month in October. Okay, so take care, keep the faith, and fight the evil banksters. So long until next time.